Denver condos and townhomes have declined in value 3 years in a row. And the reason has nothing to do with interest rates or the economy. It's hailstorms. So today I'm breaking down exactly why this is happening, showing you the data, and explaining what this means if you're thinking about buying or selling a condo in Denver right now. So whether you own a condo or whether you're trying to sell one or you're thinking about buying a condo, this video has everything that you need to know about what's really going on. So let's dive in. So you may ask yourself, how bad is the condo market right now? Let me just show you the numbers because they tell a story that most people in Denver aren't paying attention to until after they try to sell. So the condos and townhomes in Denver have declined for 3 consecutive years, which is a big deal because Denver real estate doesn't usually do that. So Denver condo prices have actually receded back to around their 2020 levels, basically erasing the entire post-pandemic surge in price. If you look back to 2020 numbers, we're only 6% up from 2020 numbers, right? Which we surged 33% in 2 years. So those have dropped down and become a much more affordable buy in today's market. So especially because of all the hail that we've received up north in Broomfield, just city of Broomfield alone, condo sales are down 30%, which is a massive drop from the point that condos were at before. And Boulder and Broomfield are feeling it right now, especially 71 days on market average compared to just 40 for single family homes in that same area. And so that data just shows us that the pace of the market for condos is moving much slower than other property types. And that gap is getting wider. It's not narrowing. So here's what makes this crisis even worse. When we get to insurance, I'll show you why some of these buildings have become completely unsellable and not just difficult to sell, literally unsellable to anyone except for cash buyers. So HOA boards are getting a really bad rap right now for HOA fee increases monthly. And a lot of those happen in January. So a lot of you are getting bad news that own condos right now, that your HOA dues are going up $10, $20, $50, $100 a month. Depending on how bad the reserves are for the HOA. But just know at this point, the higher the fees go, the fewer buyers are interested in the property because they know that more of their money is going to be spent on HOA dues instead of in their own pocket due to principal coming back to them, paying that in the mortgage. And really what I'm seeing right now, unfortunately, is that this isn't just a soft market. This is a bit of a crisis. It's getting worse as we have more and more hailstorms that are creating these issues. So understanding how we got here is something that most condo owners don't think about until it's too late. And Colorado's severe hailstorms that we have here, every couple years in most areas, we have a hailstorm that causes damage to real estate properties. And, your homeowner's policy is absolutely side by side with creating the problem here. And a lot of times, if you're not involved in your HOA board, other people are making this decision for you. And as long as you have a policy that's a 5% deductible or less, financing can still happen within that community. But the minute that you go above 5%, the community becomes unwarrantable. And nobody can get a loan within that community unless it's what we call a portfolio loan, which is like the bank's own money. They're not borrowing from government funds. It's just the bank's own money that they're using, or cash buyers. And those minimum down payment on portfolio loans is 10%. And then cash is cash, obviously. And there's not a ton of those cash buyers, but they do make up about 20% of our market. So quick note before we dive in deeper, if you're trying to sell a condo right now or thinking about buying one, I work with people dealing with these exact challenges every single day. And I can walk you through the insurance documents and HOA financials that most agents don't even look at. My contact information is in the description below. Feel free to call or text me anytime on that number. Okay, back to the video. The root cause of Colorado's hailstorm crisis. So here's where most people get blindsided. They think that they understand insurance, but the way HOA master policies work is completely different from your regular homeowner's policy. And that difference is costing owners tens of thousands of dollars. So, here's how I'm going to start. Right? I'm going to explain to you that in Colorado had over 380,000 hail loss claims from 2017 to 2019. Okay, ranking second in the entire nation as far as hailstorms go. And now we are the number one hail market in the country. And so as far as insurance claims go. So those hailstorms have caused over $5 billion in insured damage in Colorado over the last decade. And Coloradans get about 94 hail events per year on average. So this isn't a one-time thing. It just keeps happening and keeps coming. Okay, if a hailstorm causes $300,000 in damage, but the building's total insured value on the premium is $2 million, on a 10% deductible, that HOA owes $200,000, not $30,000. Okay, so if it was based on the hail damage, it would be $30,000. But since it's based on the total premium and the coverage allowable by the insurance plan, it's $2 million divided by 10%, which is $200,000. Okay, so that's a $170,000 difference from what most people think it is to what it actually is. We've got 20 owners, and our damage here is $200,000 is what we have to pay in a deductible, right? So in that case, every owner has to pay us $10,000 so that we can make this happen, pay the deductible, and keep our community afloat. And so, there was a community called the Soaring Eagles HOA in Colorado Springs that issued a special assessment of nearly $21,000 per owner after a major hailstorm that hit them last year. And so the Lake Chalette owners, they just got an $11,000 assessment for exterior stair repairs that happened. And so you're wondering, what can I do to protect myself so that I don't have this massive fun surprise on my doorstep in the form of a letter from the HOA? And here's what you can do. When you get your interior homeowners coverage, all right, with your insurance agent, that's fairly affordable. Always ask your insurance agent, do you have HO6 policies that I can use on this property? Okay, an HO6 loss assessment coverage rider on your policy will allow you to be covered if this happens. Okay, and a lot of these have like a $500 deductible for you. And so all of these things are very, very important if you're considering buying in an HOA, or if you own a condo in an HOA and you're wondering, should I stay here longer or should I sell this place and go get into something different, like a single family home that I don't have to worry about an HOA. But you can imagine for an HOA board, and a lot of them, again, are trying to do what's best for their community, but one bad hailstorm can start a downward spiral, right? And what starts as one expensive hail claim turns into a cascading series of problems that can make your condo virtually worthless. So let me walk you through this trap and how this can work, okay? So if phase one happens and claims pile up over multiple years, then communities, they file multiple hail claims, and then each hail claim makes insurance more expensive the next time around or harder to get in general. And so if you get into that phase two, then you become an uninsurable community where after multiple large claims, some HOAs become completely uninsurable. And this means that no insurance company will offer them a master policy, or the premiums become so astronomically high that it moves to phase three, which becomes the unwarrantable status, right? And when you're unwarrantable, you can't get financing in the community. So anyone that's looking to purchase in that community, they'll go to get a loan. The lender will check the master insurance policy. They'll see that it's a 10% or higher deductible, and then the loan will be denied, and they can't purchase in the community. So any loan that's backed by the two huge government entities, Fannie Mae and Freddie Mac, will not qualify if the deductible is higher than 5%. So you can only imagine when nobody can get a loan in the community with conventional or FHA or VA financing, what that does to property values in the community, right? You have this humongous buying pool that just shrunk to a very finite buying pool of 10% down or more portfolio lender type buyers and cash buyers. That's it. Then there's phase four. That's when, the HOA fee squeeze happens, right? So a lot of times to prevent future disasters, the HOA will just drastically increase monthly dues. So we're talking about dues that used to be $200 to $300, now could be $400 to $1,000 because they have to collect that much monthly from owners in order to stay afloat financially and maintain the cost of insurance that they have on their master shell policy. And for buyers, that's money that could be paying down your principal balance on your mortgage. Now it's going towards your HOA fee and helping the HOA protect themselves and build up reserves against future hailstorms. So this is the cycle. Higher fees mean less buying power for potential buyers, which means lower values, which creates even more financial pressure. And this is exactly why it's called a trap. Because once you're in one of these communities, it's really hard to get out without taking a significant loss right now, especially if you bought in the last 3 years. And this is one of the saddest stories ever. We had a client who owned a condo. They bought a condo in Aurora, and then 8 months later, they had a job change that took them to California. And we tried everything we could to get their home sold, listed it. It wasn't able to get the price that we had previously gotten because the market had dropped and there was a lot of inventory around it that was for sale. And so we applied for a short sale with the bank. The short sale, we thought we had a buyer on the line twice, and we applied for the short sale to go through. 2 times the bank declined the short sale and wouldn't take a short on the home and take less so that these awesome homeowners could get out because of this life change that they had moving out of state. And so they can absolutely cause you to have some financial turmoil. Now they have a foreclosure on their record. There was nothing we could do to protect them from that. They couldn't afford to just rent it out. We couldn't get the bank to agree to a short sale, and so it ended up getting foreclosed on, and now they have to deal with that for 7 years on their credit. Now, here's what separates the buildings that survive this crisis from the ones that become financial disasters. And it all comes down to due diligence. Okay, not all condo communities are created equal. And if you're looking at condos right now, whether buying or already owning, you need to know exactly what separates a risky investment from a potentially solid one. So let me break down the red flags and the green flags for you. So you'll want to look at the history of hail claims that the community has, right? If the HOA runs a report on their losses that they've had in the past, called a loss run report, this will show every insurance claim that they've filed. And, you can absolutely see, what the deductibles were in these situations. Anything above 5% is a major red flag because it puts the property at risk of becoming unwarrantable. Also, you can check the reserve funds, okay? Know that low reserves means trouble looming. Okay? HOA financials will always have that data in there. And, if they have a lot of built up reserves, then they can absorb some unexpected costs, and that's okay. The better bets and the newer construction have way less claim history, okay? So I would bet on those a little bit more. And oftentimes what we're seeing, especially on townhomes now that are like more your modern townhome build, is that they're doing party wall agreements. So they don't even have a big governing body for the HOA. They're asking the homeowner to be responsible for the entire building, right? The roof, exterior, interior, everything all at once with your own insurance policy. And the party wall agreement just says what the rules are between the walls and between the owners. If the roof is damaged with hail, that owner basically takes a straight line up from their property line and repairs their section of the roof. And that's what most of these modern, townhome builders are going to. And it just creates less problems. Typically the HOA dues are like $75 to $120, if that, instead of, a few hundred. And so it reduces cost, and you don't have to mess with these master policies that are being declined. You just have your own homeowner's policy, a lot like a single family home. So if I was a buyer in today's market, I'd probably be talking to my insurance agent and find out what he can find out on the insurance side of things each time I'm interested in writing an offer on a property. Before I even move forward with that, I want to know what's going on with the insurance situation. Have they been declining coverage by a lot of other companies, right? Is it easy to obtain an HO6 policy, and is it pretty affordable, to get into that way? Okay, if you skip that step and you're not looking into it, then, most of the time you'll regret it later when a special assessment bill arrives in your mailbox. Now you understand the crisis and how to spot the warning signs, the red flags and the green flags. But what does this all mean if you're trying to sell right now or if you're looking to buy right now? So if you're a seller trying to sell one of these condos in a community that has an HOA that's been challenging or has a challenging situation, you have to be very realistic about pricing. Just understand that it's the net payment that matters most to buyers. So if they're paying $3,300 a month plus $500 a month for an HOA fee, that's $3,800 a month, and they've got some risk aversion, it's going to be tough to convince a buyer to buy that place unless it's reduced 2 to 4% less than what market value is. That's how you're going to find a buyer, most likely. So you really have to make that shift before the market makes it for you and you're chasing the market. So starting out up front with a very aggressive price can really help you. You can't expect 2021 prices anymore for people to come in and just pay over asking on a unit like that. You have to make sure that you're being very realistic. Also, buyers are getting more educated on these HOAs and insurance issues. It's becoming more widespread knowledge that this stuff is happening because of the hail. And so you'll face some tough questions. You'll have to get through that, have a great listing agent that's able to represent you and be factual, but also, give these buyers some hope of what could get better, within the community and what the HOA could be doing to correct some of the issues. Also, having transparency about the HOA issues will help your sale, not hurt it. So stating some of these things up front, as far as if you had a special assessment, and just stating, yeah, we did have a special assessment last year. It's been paid. We're all covered. We had an insurance policy that covered it. Now the HOA is in a better spot, since they got that assessment money from all the owners. So dues only went up $20 a month, and we're in pretty good shape now with our reserves. Stating things that are factual, transparent, but helping buyers know up front what's going on will create trust with a buyer rather than eliminating that trust right off the start. Buyers don't want to find out their way during the due diligence process. They'd rather be told by a seller up front what's going on. Also, hiding problems just wastes everyone's time and makes buyers walk away later after spending money on the home disgruntled, and it makes you have more time off market before getting to your next buyer. Also, just know if you're a seller and your HOA issues aren't being resolved properly, then waiting might mean that it gets worse later. So it may make sense to sell now rather than wait till later. And especially taking advantage of the best season of the year during the springtime to list and sell when there's more buyers out there. So if you're a buyer in this market looking for a condo or a townhome, there may be some opportunities if you know what you're doing. So values are down significantly on these, so you can come in and get a pretty good deal. Understand they may not be done going down right now, but you can get in a very soft market where you can get rate buy downs, you can get closing costs covered for you. You can get priced down quite a bit, even more, especially on some of these that sellers are very motivated on. And you can create some great rentals, rental income, whether it's your owner occupying it initially and then 2 years later you want to transition out and go buy something else and turn this into a rental. This could be a great vehicle to be able to do that and cash flow and pay down principal with someone else making your payments for you. So there is an angle where this can be very well done. But you have to know what the HOA is doing and what's going on behind the scenes, right? Understand the potential of special assessments. Get an HO6 policy. Make sure that you know what the reserves are in the HOA, what the history's been for HOA increases on dues. Yeah, you can't just look at the purchase price. You need to understand the total cost of ownership. And working with an agent who understands all of these complexities is critical. And we have done this hundreds of times and helped buyers through this process. So me and my team, we know how to navigate through this and help you find a great buy in the condo market right now. And if you already own a condo, then these are a couple things that you can do to help mitigate your risk and find out what the status is. Go attend your HOA meetings. I know that sounds painful, but it would be a really good idea to do that so that you know what they're talking about, what the current issues are that they're facing. And also, stay informed about insurance decisions that they're making. Make sure you know what that deductible is on their master policy. Also, if this is the first time you're hearing about an HO6 rider on your insurance policy, now's the time to call your agent and add that to your insurance policy and make sure you're protected in case a special assessment does happen, because as we've talked about, it is very likely with our current environment. Then I would check your HOA financial docs, make sure you know about the special assessments, the reserves, all of that stuff, so you know if it would be a good time to offload this property, this investment now, or continue to go down the path a little bit with this one and continue to live in it or rent it out. Doing these things up front can save you from a financial disaster later. So with all of this on your mind, let me bring this together and tell you what the next move should be. The Denver condo crisis isn't going away. Colorado's going to keep getting hail, right? It's not going to stop. And insurance fallout is going to continue to happen and hit values. So whether you're buying, selling, or you already own, understanding that this stuff isn't optional anymore. Okay? It's the difference between making a smart move or losing tens of thousands of dollars. So if you need help with this Denver condo market here right now, whether that's understanding HOA documents before you buy or pricing your unit to actually sell, shoot me a call or a text at this number right here, and I'll walk you through exactly what you need to know. And if you want to understand what's happening in the broader Denver market, I have a full update on the situation, and I'll link that video right here. So bye for now, and thank you for watching.